The Bank of Canada today decided to hold their key lending rate at 2.75%. So what does that mean for Vancouver real estate market moving forward? That's exactly what we will discuss in today's video. Now, prior to this announcement, a lot of experts were sort of split down the middle. Some people believed that the interest rates will get reduced because we did have lower than expected inflation numbers. The inflation numbers came in at 2.3% as opposed to expected 2.7%. On top of that, the Canadian dollar actually became stronger as opposed to the United States dollar, which is a good sign. And those factors make a pretty good case for the interest rate reduction. On the other side, a lot of experts are sort of talking about the fact that we still have a lot of job uncertainty. And of course, having this tariff war happening is not a very positive situation to be in. The economy going forward is sort of unpredictable still. So holding interest rates at the current rate would probably be a smart move. And I think the Bank of Canada agreed with that. According to their statement, they're sort of holding the ship steady and they're waiting to see what happens in the future. They're assessing all different possibilities. And at the moment, they're decided to keep the interest rates at where they are. Now let's talk about this hold of the interest rates and how that would affect the Canadian real estate market, more specifically Vancouver real estate market. And I don't think it's going to have much of an effect. Whether it's positive or negative, I think the interest rates alone will not do much. I would actually go a step further and argue that whether the interest rates got reduced or not, that wouldn't have too much of an effect on the real estate market. If you look at the statistics, last year the interest rates were around 5% in March 2024, and the real estate market was actually stronger than March 2025, where we had the interest rates of 2.75%. That's a huge difference in terms of the interest rates, almost half of what we've seen last year. However, the market and the sales figures were slower, which tells me that having another reduction of about 0.25% would not do too much. It's not like all of a sudden people would hear, oh, another 0.25% reduction. Now I have to jump into the market. I think the tariff war threat is what's keeping a lot of buyers from sort of starting to look and buy the properties. There is a lot of economic uncertainty, the worries of recession, and that's what's really keeping buyers out of the market, not necessarily the interest rates themselves. Having said that, lower interest rates would be beneficial to current mortgage holders, especially if you are on a variable rate or if you need to renew your mortgage soon. Like for example, myself, I'm on a variable rate and it would be better for me to have a lower payment now as opposed to waiting another few months for a lower payment, because sort of a lot of experts are talking about the fact that we will see about a 2.25% interest rate by the end of the year. So another 0.5% reduction in the next few months. But again, these are just predictions, and whether it will happen or not, whether it will be this 0.5% and when exactly that will happen, it's all up for debate. And of course, time will tell. And I'll do my best to keep you updated with any real estate news in the future. Please subscribe to the YouTube channel so you don't miss those videos when they do come out. And give this video a thumbs up if you enjoyed it. Thanks for watching, and we'll see you next time. Bye.